stock chart technical analysis with the bullish engulfing candlestick pattern, which can sometimes be followed by flatter movement after trading and even closing above the high of the pattern, prior to a stronger bullish move soon after, similar to 3 methods rising price action. Since this particular bullish engulfing pattern is quite wide due to the large second candle, it could be used as a reference for support later on, but it would be a wide range and naturally less precise. But nonetheless, it still marks an area of volatile support, slowing down a large downtrend almost a full year later. Within that time range, there's a good example of one of the most bullish swing points possible. In this case, it's a green bull hammer that's bullishly engulfed. It takes place within the same approximate price range as an upswing point in the recent past. Additional bullish features include higher than normal green volume during the formation of these candles. The 2 bull hammers that form after it demonstrate bearish weakness with their longer lower wicks. And like previous examples, there's a minor delay before the chart begins closing above the high of the bullish engulfing pattern, as well as characteristics seen with the 3 methods rising candlestick pattern that marks the next stage of the uptrend's development. Sometimes price action similar to the bullish engulfing pattern can be seen when an uptrend begins to pause and possibly end. Usually there will be bearish to neutral candles, like these red doji candles, that will be engulfed or close to being fully engulfed by the real bodies of green candles beside them. These won't always necessarily be large green candles, but their real bodies will be comparatively larger, in comparison to the bearish to neutral candles that will usually have smaller real bodies. Also, the green candles could have bearish shooting star characteristics to varying degrees, with the most important characteristic usually being a comparatively longer upper wick compared to the lower wick. Close overlap of opening and closing prices can usually be used to reference resistance levels. Following this flat period of relatively indecisive movement, there will usually be some or all of the characteristics seen with a bearish kicker pattern, meaning a noticeable gap down and or a candle with a larger red real body, which decisively kicks off the downtrend. There are also situations where a series of mostly red candles begin to flatten movement on the chart, though price can still keep declining, albeit to a lesser degree. And among this series of candles, there will usually be characteristics of bullish reversal candles, such as the bull hammer in this case. This will then be followed by a large green candle that will usually engulf most, if not all, the real body ranges of these previous candles. Bullish sentiment and rejection of moving lower will usually center around the opening price of this green candle and the closing prices of the previous candles. This level can then be used to reference support in the future. In this case, even though longer bearish sentiment resumes strongly to breach this level, it still offers support to delay the downtrend for a few days, even though selling volume began to increase nearing the time of contact.